Welcome to my channel. If you're a Canadian, renewing your mortgage, or planning to buy a home in the next 2 years, you've probably got one big question on your mind. Should you go with a fixed or variable mortgage in 2025? I'm Tim Hill, a Canadian mortgage broker, with years of experience helping people like you navigate the housing market. Today, we're diving deep into the fixed versus variable debate to help you make a smart, confident decision in 2025. This is a big one, so grab a coffee, get comfortable, and let's break it all down. Stick around until the end for bonus tips that could save you thousands. Let's start with the basics. A fixed rate mortgage locks in your interest rate for the entire term, say 3 or 5 years. Your monthly payments stay the same, no matter what happens with the Bank of Canada or the economy. It's like setting your budget in stone. Perfect for planning. A variable rate mortgage, on the other hand, is tied to the Bank of Canada's prime rate. If rates drop, your payments could decrease, or more of your payment goes toward the principal. But if rates rise, your payments, or the interest portion, could go up. It's a bit of a roller coaster, but it can pay off. So, what's the better choice in 2025? To answer that, we need to look at where Canada's economy is headed. In 2024, the Bank of Canada started cutting rates after a tough couple of years with high inflation and rate hikes. By mid-2024, the prime rate dropped, giving variable rate borrowers some relief. But 2025 is a bit of a wild card. Inflation could creep up, or global events could shake things up. Fixed rates offer stability in uncertain times, while variable rates could save you money if rates stay low or drop further. Let's dig into the pros and cons to see what's right for you. First, let's talk fixed rate mortgages. The biggest pro? Predictability. Your payments don't change, which is a lifesaver if you're on a fixed income or just like knowing exactly what's coming. This is especially appealing for first-time homebuyers or families with tight budgets. In 2025, with housing affordability still a challenge in cities like Toronto and Vancouver, that stability can feel like a warm hug. But there are downsides. Fixed rates are often higher than variable rates at the start. For example, late last year, 5-year fixed rates were hovering around 4.5 to 5%, while variable rates were closer to 4%. Another catch? Breaking a fixed rate mortgage early, like if you sell your home or refinance, can mean hefty penalties, sometimes thousands of dollars, depending on your lender's terms. Now, variable rate mortgages. The biggest draw is the potential for savings. If the Bank of Canada keeps cutting rates this year, you could pay less interest over time. For example, during the rate drops last year, some variable rate borrowers saw their effective rates fall by 0.5% or more, saving hundreds annually. Variable mortgages usually have lower penalties if you need to break them early, often just 3 months interest. But here's the flip side. If rates rise, either your payments will increase, or more of your payment will go to interest rather than principal. That uncertainty can be stressful, especially if your budget is tight. You need to be ready to ride the economic waves. Let's make this real with a couple of examples. Take Sarah and Mike, a young couple buying their first home in Calgary in 2025. They're on a tight budget and want predictable payments to plan for their new baby. A 5-year fixed-rate mortgage gives them peace of mind, knowing their payments won't budge, even if rates spike. Now Lisa, a seasoned homeowner in Toronto, renewing her mortgage. She's got some financial flexibility and believes rates will stay low in 2025. She chooses a variable rate mortgage and saves $2,000 in interest in the first year when rates drop. But back in 2022, variable rate borrowers like Tom in Vancouver faced higher payments when rates climb fast. Your situation matters. Let's zoom out to the 2025 Canadian housing market. Home prices in major cities like Toronto, Vancouver, and Montreal have stabilized after years of ups and downs, but affordability is still a challenge. The Bank of Canada's rate decisions will be critical. If you're renewing, check your current mortgage terms. Many Canadians locked into high fixed rates in 2022 and 2023, some as high as 5.5% or more. Switching to a variable rate or a shorter-term fixed rate, like 2 or 3 years, could save you if rates trend downward. If you're buying, get a pre-approval. It locks in a rate for up to 120 days, so you can shop for a home without worrying about rate hikes. Pro tip: work with a broker to compare rates from banks, credit unions, and private lenders. We often find deals you won't see online. So, how do you choose between fixed and variable? Here's a step-by-step guide. Step 1. Assess your budget. Can you handle payment changes if rates rise? If not, lean toward fixed. Step 2. Gauge your risk tolerance. Do you lose sleep over economic headlines? Fixed might be your vibe. If you're okay with some uncertainty for potential savings, variable could work. Step 3. Consider your timeline. Staying in your home for 5+ years? A fixed rate offers long-term stability. Planning to move or refinance in a couple of years? A variable or short-term fixed rate might be smarter. Step 4. Look at the numbers. In 2024, variable rates were often half to 1% lower than fixed, but that gap could narrow in 2025 if fixed rates drop. And step 5. Talk to a mortgage broker. We can crunch the numbers, compare lenders, and tailor a plan to your goals. Before we wrap up, here are 3 bonus tips. First, consider a hybrid mortgage. Some lenders offer a mix of fixed and variable rates, splitting your mortgage to balance stability and savings. Second, watch for cashback offers or lender incentives, especially if you're renewing. These can offset closing costs or give you extra flexibility. Third, stress test your decision. Calculate what your payments would be if variable rates rise by 1 to 2%. If that's too much for your budget, a fixed rate might be safer. And here's that bonus tip I promised. Many variable rate mortgages let you lock into fixed at any time for no fee or cost. There are a few caveats, but it's nice to have in your pocket if you have a variable rate mortgage and are worried about rates going up. Choosing between a fixed or variable mortgage in 2025 doesn't have to be overwhelming. As a Canadian mortgage broker, I'm here to help you find the best rate and terms for your unique situation, whether you're renewing or buying your dream home. Drop a comment below with your questions or share your mortgage story. I read every one. Hit that like button if you found this helpful, and subscribe for more tips on navigating Canada's housing market. Want personalized advice? Contact me for a free, no-obligation consultation. Let's get you into the right mortgage. Thanks for watching, Canada. I'll see you in the next video. Until then, happy house hunting.